Hey guys, Shelby Mathis here, and today we're going to go over the elimination of the income tax, actually something that's going to happen. And I'm going to give you three takeaways from the Trump administration proposals, and you could helpfully glean a path going forward and what's really going to happen. So let's dive right in. So last week, President Trump said that they were talking about elimination of the income tax, and people started running with it. And of course, there's videos out there. We're going to eliminate the income tax. And what you have to do is listen to what he is saying about where the income tax used to be prior to 1913, when it was mostly tariff based, and where our revenue sources actually come from. So let's start right there because that's critical to what's actually going on. And then I'll hit two other things. And we'll talk about the Tax Cut and Jobs Act and what's actually going to happen. And we really want to focus in on government spending because that's what you really focus on whenever you're talking about taxation, because there's multiple types. But let's talk about actual income taxation, where it comes from, and what we're talking about, because there's multiple categories. It's not just wages, because we could always say, hey, there's an income tax on our wages. Absolutely. Your labor is absolutely taxed, both at the federal level and via something called Social Security and Medicare. So FICA, whatever you want to call it. It's 12.4% for old age disability and survivors insurance, and Medicare is 2.9%, goes up to 3.8%. We have all these ins and outs, phase outs, things that happen. We had the federal income tax, which is 0 to 37%, which will go up to 39.6% if Congress doesn't take action before the end of the year. So these things are actually hard-hitting different types of taxes. So you have your income taxes, you have your federal income taxes, you have active taxes, which imposes that employment tax on it. And then you have your things that are like portfolio income, which is your capital gains, your dividends, your royalties. They're taxed differently, sometimes at lesser levels. Like, for example, long-term capital gains, 0, 15, or 20%. Interest income, ordinary income, 0 to 37%, but maybe you're going to be able to avoid having the employment taxes on it, depending on where you earn it, whether you're a bank or not. You have things like royalties where, again, you're generally speaking as an investor, we're going to avoid the employment tax, but we're still going to get hit with the federal income tax. You have things like rents, which are going to be ordinary income. It's taxed at our federal level, but not subject to the employment taxes, right? There's passive business incomes where I'm not working for the money, but maybe it's an active business interest, maybe it's an S corp or a partnership, where I'm not being taxed on employment taxes on it, but I'm still taxed at the federal level on it. Maybe you have lots of different things. So big ones: the interest, capital gains, dividends, royalties, your active income, and your rents. Those are the big ones that are actually express taxes where you get hit on. What's another express type of tax? A tariff. And that's where Trump keeps going. He keeps talking about raising tariffs, and you're going to see him using that as a negotiating ploy because he wants to lower the express taxes. That's what this is all about, guys. And so when he starts saying, maybe we're just going to go heavy tariffs, it's because people say tariffs don't work. You can't use tariffs. They're not. Yeah, we could go 100% tariffs because we have done that in our country's history. Is he actually going to do it? No. These express taxes are needed because if we didn't have them, then what's the other type of tax that's out there? The hidden tax. Inflation. Been yelling about this for years and years and years. If you want to see the value of assets go up, watch the M2 money supply. During COVID, you watch trillions of dollars get printed. You saw inflation go through the roof. It's the same chart, whether you look at the cost of housing or you look at CPI, the Consumer Price Index. It follows that M2 money supply. It's because when you print cash and you print more money, you're devaluing the assets out there. The US dollar that are at the dollar that's in your pocket gets less valuable and it goes down over time, and other assets go up over time. That's why you have all the people going out there saying, let's buy gold and stuff, because it's a hedge against that, because that's a protection. Bitcoin, oh, because we want to get away from the US dollar, because the government keeps printing it out. They either borrow it or they print it out. In fact, let's listen to our friend Milton Friedman talk about this type of tax.
Keep your eye on one thing and one thing only: how much government is spending. because that's the true tax. Every budget is balanced. There is no such thing as an unbalanced federal budget. You're paying for it. If you're not paying for it in the form of explicit taxes, you're paying for it indirectly in the form of inflation or in the form of borrowing.
100%. That's the secret tax. And when you have Doge attacking wasteful spending and all these things, and they're giving you this hope that somehow we're going to reel in this government, understand the government's already $36 trillion in the hole. They've been getting themselves deeper and deeper in debt to the tune of, what was it, 1.8 last year. They're already $700 billion in debt in the first quarter of 2025, which is actually September through December, because the government's year end is in September. So they're going backwards, even with Doge coming in, and let's say they knock out $1 trillion. We're still in the hole every year. Regardless, we were 1.8, so they shave off $1 trillion, then we're only 800 billion in the hole every year. And instead of being 36 trillion, now we're 37 trillion in debt. How does the government cover that? They borrow, they do bonds, or they continue to have additional money printed. Either way, it's inflationary, which is why, if you've been listening to me, I'm still really concerned about inflation as we go forward. One of the reasons the Fed quit lowering their interest rates is because we're going to still see so much demand. We have so much demand, for example, for housing. We're 5 million units underbuilt. Well, they're going to throw out illegals and all this stuff. Barely a drop in the bucket, guys. Still, we're not building fast enough to keep up with our population. We have too many people. We had an increase in homelessness last year of 18%. So we're in a struggling situation, but interest rates are high. Building permits, you're going to watch them, the ramifications of what's occurred in the last year play itself out next year. What we're seeing right now is a lot of multifamily still hitting the market because it was being built 3 years ago, 2 years ago. Now it's hitting the market now. You're going to see that discontinue, and all of a sudden we're going to end up in a bigger problem. That's what I'm looking at. I'm really focusing in on that inflation. So what is Donald Trump focusing in on? Tax Cut and Jobs Act. Why? Because I'm just going to use a study. According to the Hutchins Center, the average tax increase, if the Tax Cut and Jobs Act expiring provisions, and I'm going to go over that. There's two types. There's provisions in the Tax Cut and Jobs Act that are expiring, and there's ones that aren't. The ones that are going to expire will cost the average American, on average, $1,900 a year. It's going to eliminate, and I just looked at the facts, 6 million jobs. It's going to cause problems if they do not attack that income tax, if they do not cause the express taxes to either extend those Tax Cut and Jobs Act or continue to add more. So now you understand why he's talking about eliminating income taxes altogether. That's a marketing ploy, guys. That's a negotiating tactic. I'm going to push it all to tariffs. He's saying, basically, Congress, get your ass in gear, lower those income taxes, or I'm going to go do something else. We'll get rid of them and we'll just go to tariffs, right? If you guys can't get this done and quit beating the heck of, what's happening to the American public, and we all know what's happening, is our wages have not kept up with inflation. Inflation's going to keep speeding up. We need to have more money in our pocket. And how are we going to do it? The government's going to lower those express taxes. It doesn't mean that there's no taxes. It means that tariffs are going to have to go up. It'll replace some of it. And the rest of it is Milton Friedman. It's going to be that inflation. Let's actually listen to the White House as they spell this out.
So these are the tax priorities of the Trump administration that the president has laid out for members in that meeting today. No tax on tips, which is obviously a very public campaign promise that the president made. No tax on seniors' Social Security. No tax on overtime pay. Renewing President Trump's 2017 middle-class tax cuts. Again, these are the president's priorities. Adjusting the SALT cap. Eliminate all the special tax breaks for billionaire sports team owners. Close the carried interest tax deduction loophole. Tax cuts for Made in America products. This will be the largest tax cut in history for middle-class working Americans. The president is committed to working with Congress to get this done.
So what you're hearing quite loudly is not only are we looking to extend out the Tax Cut and Jobs Act expiring provisions, and let me just give you an example. Your tax rates will go up next year if Congress doesn't act. It's no longer 37%, it's 39.6. It's no longer 22, it's 25. It's no longer like all these different provisions start to go up. Let me see. I could tell you 15, or your 12% goes up to 15. Your 22% bracket goes up to 25. Your 24% bracket goes up to 28. 32 is 33. 37 is 39.6. That's just one example. Your standard deduction, which sits right now at about $30,000 exactly for married filing jointly, goes down to about half of that. That goes away. That's Tax Cut and Jobs Act expiring provisions. Things like your child tax credit goes down from $2,000 to $1,000. There's things like your moving expenses, which would actually be a good thing. Right now, only the military gets to write them up. Hey, maybe we got to write those off. Excuse me, miscellaneous itemized deductions comes back. Some people say, hey, that's good. Mortgage interest limitation goes up. Some people would say, that's good. There's always going to be room for we say, hey, not all the provisions do we need to extend. So for example, the SALT limitation you hear about. That's where if you're itemizing your return, which is only about 20% of the people, but if you're a high income individual, you're not getting to write off the amount of taxes you're paying your state. It's limited to $10,000. So they're talking about increasing that. So all of this, the extenders on the Tax Cut and Jobs Act is not just provisions that would actually just expressly lower some taxes. In some cases, we're going to eliminate some tax that you're getting hit on because you're not getting a deduction. Some of these things could be really great. The bonus depreciation, right now we're sitting at, I think we're at 40% this year, and then it goes to 20% and then it's gone. That is your ability to write things off quicker when it's property that has a useful life of, let's say, 5, 7, 15 years, as opposed to 27 and a half or 39 years, right? So if you could break a property down, like if you're real estate, we can break it into its components. We are able to accelerate that depreciation. That's going away. It's phasing out. The 20% deduction for businesses on pass-through business, that goes away. That's gone unless Congress acts. So what they're saying is, not only are we going to extend those, but now we want to eliminate tax on tips, on Social Security, on overtime pay. And by the way, they know there's guys like me out there. I'm a tax attorney, right? What are we going to do? Well, if I have a client and they have their business and right now they're paying themselves X number of dollars a week for 40 hours, right? And I'm going to say, how many hours are you actually working? Are you working 60 hours, 80 hours like most of the entrepreneurs I know? Then what we're going to do is we're going to lower your base pay and we're going to pay you overtime because it's not taxable. They're not stupid. They know that guys like me are out here. Or tip income. We're going to recharacterize a bunch of your income. How are you going to do that? There's laws that allow us to do it, guys. There's guys like me out there that can do it. Bonus depreciation example. We know how to take advantage of these things when they give us an incentive. You're going to give me an inch. Great. I'm going to take that full inch. Right? You're going to give me a benefit. I'm going to take that full benefit. We're going to show you how to take advantage of it. They know there's guys like me out there. So when they're saying no tax on these things, they're saying I'm giving you, as a business entrepreneur, as an investor, here is something I am going to give you to utilize to save your clients even more money. They're not dumb. Renewing all those tax cuts, there's a bunch of them that are of benefit. There's certain ones that aren't coming back. Like there's a permanent 21% tax rate on corporations. That's not even up for discussion. That's permanent. Elimination of entertainment deduction. People think, oh, that's coming back. Nope. Miscellaneous itemized deductions might come back. Entertainment, nope, that's toast. There's permanent provisions that are not coming back. And then there's ones that we need to actually have extended. Things that he's saying, hey, we want to make sure that sports teams owners and people getting earned interest, which is taxed as capital gains, carried interest deduction, that we're going to close that loophole. Okay, that's going to increase taxes on those folks. Fantastic, do it, right? I'm okay with that. And then cutting tax on American products, actually lowering, I think it's a 28% deduction for domestic. So you're lowering that 21% corporate tax down to about 15% on domestic production. Those are great things that are going to continue to drive the economy so that we can create a little more express tax revenue. In other words, if you tax things too high, you get less of it. So he's saying, let's tax a lot less, let's let the economy run. But what is the ramification, guys? The takeaway from this is we're going to have inflation. Absolutely 100%. They could say whatever they want. That's the Milton Friedman, right? What you really look at is the amount the government's spending. The rest of this is just moving chairs around on the deck of the Titanic. We can increase tariff income. Fantastic. It's going to drop in the bucket compared to express taxes. We lower express taxes, cause the economy to run. What happens when the economy runs? Inflation goes up. Even with high inflation or high interest rates, we're going to see inflation because the government has not cut its spending. Doge gets in there, starts rooting some of these things out, and actually makes a difference. Like if they actually have a balanced budget, then I'll eat my words. But I don't think that actually occurs. Or actually, Milton Friedman wisely says that always balances because they just print more money or they borrow more. But if we actually cut our spending to where we eventually have a surplus, then I'd be shocked. Then I would say, okay, now we don't have inflationary activity, but I don't see that happen. Again, we're $36 trillion in the hole. Just the interest on that's going to leave a mark. We're going to have massive growth in our economy to offset this, and it's not going to happen overnight. So crystal ball time. Here's my takeaways. Real easy. What do I think? I think they're going to get the Tax Cut and Jobs Act extension done before the end of the year. I don't think it's going to be right away, but I think it'll be before the end of the year. I think they're probably going to get a few of these proposals through. It'll be interesting to see whether they can close some of the loopholes up so guys like me don't completely run rampant with them, right? People do. And it's because they give you a loophole, take advantage of it. If it's black and white, take advantage of it. If it's legal, take advantage of it. If it's illegal, don't. Right? You're not going to do anything wrong, but you're going to say, hey, my facts give me this benefit. I'm going to take advantage of it. I don't think you're going to see us eliminate the income tax. Again, I think that's a marketing thing. That's a negotiating ploy from the president. I think what he's saying is not only do I want these things extended, but I want a lower income tax on Americans. And we're going to let it fall into those two other brackets, the two other types of tax, which is inflation and tariffs. Some in tariffs. You've already seen a willingness to go to bat on that. And then the rest of it's going to be inflation. So some people might say, no, we've got inflation under control. Be prepared, guys, which means real estate, investments, don't just let your stuff sit in cash. As tempting as it is, I know a lot of you guys are just throwing money in savings accounts. Like, I'm not saying don't do that, but you're going to have to be measured with it. And you're going to have to take a little bit of risk if we're going to have an inflationary cycle, which is what I think. I think that that's the category. So if there's three categories, express taxes, I have tariffs, and I have inflation. I think they're going to lower the express taxes, keep it low. I think you're going to see inflation run, and I think you're going to see slightly higher tariffs. If I was a betting man, that's what I would do. But again, nobody actually has a crystal ball, but at least now your eyes are open and you know what the game that they're playing. Hey, if you can, like and subscribe. Leave your comments down below of what you think is going to happen. If you disagree or if you have additional information or you think I'm all wet, feel free to share it. I read the comments, and a lot of times I'm like, oh, you're right. Sometimes I'll just say, you're right, I missed that. But I always appreciate the feedback. Share it with anybody you think that could benefit from it, and I will see you again later.